Sorry, Dave. My apologies. Dave says, I have a portfolio in my, I have a position in my portfolio I need help with. The option is CON, sold at 67.29. Okay. All right. January 2024. Okay. So let's go to custom spreads for the time being. COIN. I know coin's been all over the place with Bitcoin, of course, naturally, but it's had its ups and downs just like everything else. January 2024. And okay. I need further information, Dave. What I'm missing here from what you said, you gave me the 24/01/19 date, and you said you sold it at 67.29. Call or put, and which strike? Was it the 119 put? I thought that was the date. It was 119. 180. Okay, great. All right. Okay, good. Not good. Sorry, Dave, but now we got it straight. All right. So there's our 180 put sold for 67.29. It's about 119 right now, it looks like. Buyback cost. All right. So deep in the red here on the position. Liquidation value. I'm sorry. Let's do it the good way. Now that I've just put it in here, so we're seeing where we are. You've got the 180. You're 120 points in the money. So this put is pretty much just that intrinsic value to buy back. So you've got 67. It's going to cost you 120 to buy it back. So you're losing $6,000. That's for one contract. You might have multiple contracts. That's okay. Let's add it to the portfolio. I will just keep it here, September 23rd, with Alice's. Date is irrelevant. All right. So we are down 30.3% of the 180 investment, $18,000 monetary requirement for the cash secured put. It's already out to 2024, which makes rolling these now difficult. Why does it make rolling them difficult? Because there's not much, there's a couple I think I saw down there, but there's not much further we can roll out to try to get a credit. It will also be maybe 600 or 800 days out in time as opposed to 483. So let's take a look here. Do we have anything in position analysis? You got your 67.29. We're at a loss of $5,400 with a buyback cost of $12.18. And I hate to say it, and you probably hate to hear it, David. I know you probably have more contracts, but that's not that bad because you got that nice premium of 67.29. Looks terrible. Don't get me wrong. It's a 30% loss on the investment amount. But again, it's not as bad as it would have been. And no rollout opportunities are available. So we're losing 54.56 on a deep in the money put option for coin. Jot that down, 54.56. Or is it 26? I'm sorry, Dave. 54.56. Okay, great. Great. First thing I might consider is just going right back to the profit and loss chart here. And let's look at our view options again. We're already out to 24. There is a 25. Is there anything here that's $50? No, 23, 24, 55 at 20. The 55s are here at the 105 or 110. You could roll down to the 110 or the 105 for essentially a break even, meaning you have no premium. And the hope that the stock comes back up only needs to go back above 110 instead of above 180. Don't think that's what you want to do. Let's go to 25, 847 days out. Here, it's the 100 strike. Why would I even consider doing this? Well, if you're staying in this position and you haven't closed it yet, it's because either you're holding and hoping, Dave, which we don't want to do with a deep in the money naked put, deep out of the money covered call. That's expensive. You want it to probably, I know, I'm not trying to be Captain Hindsight, but you want to try to roll this position when it started to breach your short put strike price, maybe roll it again, and then maybe just have bailed on this position because it's highly volatile. I know that the Bitcoin has come back up recently. I'm sorry, I'm going the wrong direction. Sorry, folks, for scrolling. Let me take a look here. I didn't think it Oh, yeah. So we were up here at 115 at one point, and then we collapsed again and got back up to 85 or 90 and then collapsed again. You're going to hate this comment, Dave, and I apologize for it. We didn't see a lot of rollout opportunities that you could do other than to break even with the cost basis while still being in the money. But being at the 120 strike, 115, 110 strike, instead of being at the 180. The way this thing moves is that I'm not going to say the market is settled, but we're seeing those strong buys. If we start to see a settling and a move back up and it comes back up to 85 or 90, I should say 75 to 80, you might see some better rollout opportunities. You know this thing is going to be fluctuating constantly. So what have I got for you, Dave? Without getting, again, too elaborate and trying to close this position and roll, we'll take a look at it, but again, I'll show you why it's difficult. We don't see a lot of rollout opportunities for this position. To get the 54, 56 we're buying back. It's going to cost us around 120 to buy it back or so, the one, whatever we saw. But the loss was 54, 56 right now to liquidate this position. So I'm going to say is 1, 2-0. Wait, I don't think you're going to get assigned early, even though you're deep in the money, because this is out to 2024. Could coin go to 30 and cause you much more pain and headache? Absolutely. But the way this thing moves, if the market starts to recover, it could go back up to 80 or 90, 75 or 80, 85 maybe. You might see some better roll opportunities in those cases. Number 2, close it. Okay, this thing is a wild ride. Whether it's even when the market is stable, if Bitcoin's going crazy, coin is going crazy. All right, very hard to do a directional strategy on, but it can be very profitable, which is maybe why you chose it. However, close the position, take the loss. It's a 30% loss. It's $5,000, $5,400, $5,500 times the number of contracts. No one wants to take the hit, but maybe try to make it back on other positions that are more stable and directional for what your goals are. 3, roll down now, but you're not rolling for a profit. You're rolling to a break even and you're still in the money. You're just not 120 points in the money. You're 50 or 60 points in the money. You could keep the 2024. We were looking around the 120 or the 110 to get the $54 or $5,000 back. It's not a profit yet. What you're hoping for is that it starts to recover and you see better roll-up opportunities where you can start to profit as the stock recovers. I'm not saying I think at all that coin will go back up to 110, 120, 130, 140. It's possible, but I'm not saying that. I'm saying a better opportunity at 75, 80, 90, maybe 95, hopefully. It's hard to gauge with this market, and it's hard to gauge with this security. Number 4, the elaborate. But before we go to number 4, we'll call that number 5. We'll call 5 elaborate. Number 4 is wait and do nothing, but if you get assigned early, even though you're out to 2024, start treating it as a covered call to make back the 5,500 that you lost in the positions. Now you've got 100 shares of Bitcoin or coin, at 180, but you've lowered the cost basis down to 112 with that premium. And the stock's at 61. You're still at an unrealized loss of that $5,400. But maybe start selling 80 calls, 90 calls shorter term against it, getting $2 here, $3 there, $4 there. And over the course of the next year or two, you might make that back. I mean, what do we need? 18 months at $3 to get to 5,400. A year and a half, which is where 2024 essentially is, right? A little bit less than that. But in any case, that's another opportunity. So the 4 would be take a sign, do nothing, and if you get assigned, convert it to a covered call, collar spread, or something along those lines. Now, let's jump into the elaborate. What I mentioned for Alice about the TQQQ position. We know we're just going to close this. We're going to buy to close this right now. We saw the loss we're taking of $5,456. I'm not going to go out to 2024. I'm going to go just out to 2023, which is probably a bad move, but we're going to try it. Nope. I gotta stay there. I'm sorry. Let's go back to January. All right, so what am I gonna do now? It's so expensive. In any case, they're about the same. I really want I think I want the 65s, not the 60s. Okay. Sorry about the scrolling, folks. So what am I going to do? I'm going to sell the 65 at 27, sell the 65 call, maybe about 25. Okay, so I'm getting 52 back. Not quite there, but I'm not doing this as a naked straddle. I'll buy some premium. Yeah, this isn't a good idea. So this is why I said sometimes the elaborate doesn't work. I go 35 points down. I go 35 points up. This isn't giving me the credit I want. I'm sorry. It's taking too much away. So this is a strong-looking butterfly for 483 days of waiting, but anything can happen. Upper break even of 92.98, lower break even of 37.03, but you're only making 2,700 back, half of what you need essentially. So that's not going to cut it. We're going to have to figure out something else there in that case. But I don't think any butterfly will work, as we saw with the premium, even if we went out further in those cases to 2025, and you'd still have a margin requirement, not as much as the naked put. So again, one, I'm not going to draw it out again, but review that last couple image when you review the recording, Dave. One, do nothing. Wait to see better opportunities down the road. If you do get assigned early, convert it to a covered call, make the profit back that way. Two, close the position, take the loss, look to make it back on other underlying securities that are much more stable for a naked put strategy, cash secured put strategy, as opposed to something that moves very quickly like this, or a 2 or 3 times ETF. 3, roll it down, but we didn't see a lot of opportunities that we liked in those cases. We didn't get back to break even maybe going out to 2025. But once we go out to 2025, we've hit the wall. It's going to be harder to keep rolling and adjusting the positions. There are rollout opportunities the portfolio would show you. I'm sure you checked that. If you're tracking the position in the portfolio, as we showed with the position analysis view, nothing came up. Number 4 is sort of number 1, do nothing, but if assigned, then convert it to the covered call or the collar spread. And then, of course, number 5 was the elaborate, and I did not see a good sort of spread that we could create, closing this and converting it to sort of a butterfly of some kind or a condor that would get us the $5,400 back based on the prices, the high prices even of the out-of-the-money options, Dave. So I know that didn't give you a direct answer. I didn't show you something that's going to give you a profit right now. Someone says, what about your bear put debit spread idea? Let me go back to just the portfolio position and link back here. The problem is with that is just what I think we saw with Alice's position on TQQQ, that we are now so deep in the money that buying a higher strike put here is going to cost so much that the debit will not be covered. So even if I went to the 190, the cost is going to be around 130. So my debit is too high to get the profit back from the 10 points. But let's take a look here. We've got the 180, which buy back around $11,000, $12,000. 190, yeah, 13,000. 1290 to 132. But we only collected 67. This would work as a debit spread maybe now. It's right at intrinsic if you could get midpoint. But converting this to a bear put debit spread now locks you into a loss of almost exactly where we are. If the stock stays below 180, you take a loss of 5,300 instead of 5,465. And that's the best case scenario, 483 days away. You've got time. That's the one advantage here. It's not like this is coming up to expiration next week or October standard expiration. You've got 483 days. A lot of things can happen. I don't like to be that guy that doesn't give good advice and advice that could hurt you, but I can't give any advice anyway. This is just my thoughts for educational purposes, Dave. But maybe just wait on this, and if we get another good movement in the Bitcoin and in Coinbase itself, it moves with the other, then we'll be in a good position. Maybe, I'm sorry, I'm going to say a better position. I'm not going to say a good position. I'm going to say we're going to be in a better position perhaps to see more rollout opportunities or adjustments rather than being in this situation where it's $13,000 to buy it back and we're taking a loss of $5,400. I just want to remind everyone, of course, today's material are my thoughts and your questions designed for educational purposes, increasing investing performance and options knowledge. Any stocks or options discussed today should not be taken as direct recommendations or direct trading suggestions. Options do involve risk, as we saw some today, and may not be suitable for all investors. We didn't get a chance to go through the search tool today. We showed the portfolio. We showed the power of the rollout opportunities. We showed the history using the custom spread tool, using the historical chain a little bit. You could get access to these tools at any time for 14 days, no credit card required. Just go to powerop.com, put in your name and email address. After that, subscription levels start at only $45 per month for the end-of-day data service. We do offer the 15 to 20-minute delayed service, which is only $65 per month. The upgrade from the historical data, the delayed service, where you still get everything on the delayed service, but have access to the full historical tools, is $100 per month. Free coaching sessions are available on all levels of service. You can cancel at any time. There's no contractual obligations. You can upgrade at any time as well. And you have full access to the webinar archive. Speaking of which, remember, at any time you can go through the education. Underneath the main home tab, click on free webinars, and you can go through the Power Options tools, option strategies, concepts, and more. Or just head on over to our YouTube channel, use the search function to look for terms you're interested in: cash secured naked put, diagonal calendar spread, things of those lines, and you'll be able to see our video. Or best thing to do is maybe check out the playlist there on YouTube. We've got about a dozen or so based on strategy, 9 to 10 videos in each, walking through the basics to the search criteria, do's and don'ts, management techniques for a losing trade, management techniques for a winning trade, and much, much more. Well, if you do think of any other questions later on, hey, we're around all weekend, essentially. So send us an email at any time to support@powerop.com or support@radioactivetrading.com. You can also call us during market hours at 302-992-7971. And, of course, trial members and subscribers, you can schedule a free coaching session at any time. It's essentially a 35 to 45-minute phone conversation with myself or Ernie, walk you through the tools on the site, and answer any questions that you have.